keep your attention for a little bit longer. As Eric mentioned here, SilverCrest Metals is the new company, which is the of the predecessor SilverCrest mine, successor, sorry. So the idea here is, once we get into the details, there's three things we would love you to take away from the story today. One is grade. We just came out with that maiden resource a few days ago. 3.4 million tons. The average grade is 572 grams a ton silver equivalent. And within that, we have some, the Bobby Kenora vein, which we'll put more details on that. We have the Area 51, which I might have to borrow Eric's tinfoil hat there, where we're averaging over a kilo a ton. The second point to really highlight here is upside. That maiden resource is only on 5 veins. Those 5 veins are only partially drilled off. We have drilled 9 veins partially to date, and they've all hit high grade. And so far on the surface to date, we have identified 19 veins. So this truly is a maiden resource. And we will be aggressive in the drilling going forward. The last but not least, but I would say it's the most important point, is management. So Eric Fear, who's our CEO, he's a geologist, he's a mining engineer, he's been part of building 10 mines. Hopefully this is the 11th. It is a family affair. His daughter is a geologist and mining engineer. She's on site. Eric's son is a mining engineer. He's down site. So we always, when people ask if you're going to build this mine, we say Eric needs to spend time at the mine to be with his family. So those are the takeaways here, as you can see on the main slide here, doing it again. So again, the original Santa Elena mine, 25 kilometers away. So we built, we discovered, financed, permitted, built, operated the Santa Elena mine, and that was a 4-year process. And that's really important because the idea here is to be on the exact same 4-year time horizon. So I think the goal would be by the end of 2020, we'd be getting into production. I will ask you to recall this slide and just get a sense. That main vein, the Bobby Kenora, just kind of goes from the top right to the bottom left there. So that's something we'll refer back to. Which one's the forward here, Eric? Green one, all right. The forward-looking statements, just keep those in mind. So again, why SilverCrest Metals? So again, you cannot understate enough, Eric Fear and his importance there. So again, we've been in the neighborhood for 20 years. We're in Sonora, Mexico. Again, that's the good part of Mexico here. Community relations are fantastic. We were on time, under budget in the first Santa Elena operation. So again, doing the exact same thing, the same neighborhood, gives a lot lower risk profile in an industry we all know has a high degree of risk. The inferred resource that we just put out, again, I'll highlight that again. That's a very significant milestone for the company. 3.4 million tons. I'll let you do the math at home at 350 days a year at 1,500 tons a day and get a sense of whether or not you believe we have a standalone operation in hand. Those 63 million ounces at 572 grams a ton, that is a world-class asset. And as you'll see, to put that in context, the Santa Elena mine next door that we, again, built and put in production, they've got about 40 million ounces remaining right now, and their average grade going to the mill is 150 grams a ton. So a little bit of history there that's relevant is not only is Eric an amazing geologist and mining engineer, he's a great deal maker. The first SilverCrest we sold at the end of 2015. Silver was not doing so great at the time. If you know First Majestic, they've got a suite of assets that tend to be higher cost. They were feeling the pain that most people in the industry were. Their balance sheet wasn't so strong. We ended up selling to them this asset, to the company. We took 23% of that stock. And in the next 9 months, the stock went up 600%. I'd like to think a lot to do with Eric's work on the asset and what that asset did to First Majestic. We certainly got a little lucky with the commodity price and the market sentiment. But this company and this asset is 25 kilometers away. The original idea was to have this asset within the original SilverCrest, but we spun that out. So we spun out what we thought and hoped to be the crown jewel in an area that made some sense. So we're charging forward here, and this first resource is sort of the coming out party for us. Again, the upside, that's a huge part of the story as well. Again, the 5 veins, 9 have been high grade. We will be aggressive in the drilling going forward, and we have had a very strong track record with the drilling. We've hit on 80% of our drill holes to date. and we've been adding ounces at less than 30 cents an ounce. So we're very prudent with capital. It's a lot of our own capital, which we'll get to as well. And again, that resource, again, all inferred, but again, you know, some of the spacing, especially in the areas that we've seen the highest grade, at about 40 meter drill spacing. So we will be doing a lot more exploratory drilling, really trying to push and build out the scale and size. And again, as we move towards PEA and PFS, we will kind of back in and do some tighter spacing on that side. One of the main benefits, you'll meet Eric. He wears many hats, not just the tinfoil one, but he's a historian. He's also a rancher. Again, very important in the Sonora area. We have a lot of historic data that has been invaluable in terms of moving forward with this asset. It was a prior producing asset. He'll go back to the days of the Spaniards. But largely 1880 to 1930, it did produce roughly 100 million ounces of silver. And the average grade there was 1,700 grams a ton silver and 15 grams a ton gold. So you'll get a feel for, again, what we're seeing is in line with that. Corporate structure will be quick here. 18% is held by insiders, employees, board. Eric owns about 10%. I joined recently, to Eric's point, about 8 weeks ago. I put 750 grand of my own money in on that time. 34% institutionally held and 18% friends and family. So quite busy there. We have about 8 million in cash as well. The Las Chispas district, as you can see, the red circle there, that's us. The Santa Elena mine, what we built, 25 kilometers away. Mercedes is also there as well. Doesn't need to be a third mill, but again, Eric is certainly capable of building one. This is the resource. This is what we just came out with, which is significant. Bobby Canora vein, that is going to be the main driver here. You can see that's 46 million of the 62 million, and that average grade 766 grams a ton. So again, that's significantly higher. The Area 51, again, this is something that's only come to light in the last 2 to 3 months. You look at the press release of December 27th, you'll see that whole 51, which is what we refer to the Area 51. That average grade in there is over a kilo. So that's 20 holes of 185 that compile the original resource. So don't ask me to do much more math than that, but 32 million ounces, you're about 1.5 million ounces per hole there. So from an efficiency standpoint and an impact standpoint, it's important to note we have 5 drill rigs running in that area now, and we expect to be very busy with news coming out to the market on that front. Again, some of our lower grade material, that the dumps is at the very bottom. You can see it's 256 grams a ton. Great for de-risking our commissioning of our mill, but to note that's higher than the grade going to the mill at Santa Elena today. Again, Sonora, Mexico, it's a good part of Mexico. You know, again, we have a lot of benefit. You can see the adits and the drift that are already in place for us, saving us a significant amount of money, you know, to get this project up and running. Again, this is a quick little look at the Bobby Canora vein, starting from sort of the top right, working its way down. The historic mining, why it was such high grade, the way we benefited was there was a fault. Historically, in the old time miners, the vein was offset. That really high grade, 1,700 grams a ton, they mined that. The vein was offset, and they missed it. So this resource is still in virgin territory. It's unmined area, over 80%. So that fault, again, we just kind of moved off another 20 feet or so, and we found the extension, hence the Area 51 area there. It is open to extension, and it is open to depth. Again, we will be drilling aggressively in that area. Expect a lot more to come from that there. So again, we still have 1.5 or 1.3 kilometers left to go in this one particular vein. Bobby Canora so far is about 1.5 kilometers. And again, remind you that that is only one vein of 19 we've seen on the property. And 9 veins have hit high grade, and only 5 of 19 were in that original resource. Las Chispas, we'll go quickly, a little history buff for you. So, I mean, the other part of the property, which is a smaller piece, this is something that's in the Museum of Natural History. That's about 12,000 ounces per ton. It's under, you know, construction right now, so we'll, you can't see that in the museum right now. Catalysts, why you're here, why you should be paying attention right now. So we will be aggressively drilling. You should see a lot of news coming forth on that front. By the end of the year, we're talking about an updated PEA. It's very, very significant for us. So I refer you to 8 Capital, Cormark, PI. They have research out on us. They have IRRs at 77% using under 500 grams a ton. We hope to front-end load Area 51. Again, I referenced that picture. We're going to build a drift into that area. It's going to be a cost-benefit break-even for drilling, but we're going to be able to produce from that Area 51 right off the bat. So I really want you guys to pay attention to the 1 kilogram a ton material, and if we can put that in the front end of the mine, that's probably a big takeaway for you to really drive some catalysts in the very near term. That's great. Thank you very much.
Okay.